Yo, ladies and gentlemen, welcome back. I hope you all had a fantastic weekend. It is Monday, October the 4th, and the market's pretty much sold off today. All right, now the SPY was just down about 1.3%. The Qs, SMH, IWM, the Dow were also all in the red territory. Now, on Friday, we uploaded a video, and the title of that video was The Moment of Truth for the Stock Market. And in that video, we discussed two possibilities for the markets as to what we thought it were going to do. Okay, obviously, possibility number one was that if we were to hold certain levels, I'm just going to do a recap before we dive into the actual analysis. We wanted to see certain levels hold because on Friday, we rallied towards the close. Okay, so that showed a positive bullish count or bullish interpretation that there was a good possibility that we found the lows and we were going to head higher. However, there was also that alternative that I've been favoring that we will see for the downside. Okay, now the question is, are we going to retest or going to test the 200-day period moving average? The last time we tested that average line was back here on June the 15th of 2020, and then again on July the 1st of 2020. Ever since then, we've just been riding the 50-day moving average all the way up until we broke below it, retested it, and now we're selling off. Okay, so we're not too far off from that trend, from that moving average. We're just shy of about 3 to 3.5%. Okay, so that's not out of the question. We may see for the downside to retest that line. All right, now on Friday, we were discussing this chart. Okay, let me take a quick screenshot of this and just show it to you. So on the 30-minute time frame of this chart on Friday, from September 2nd highs, we sold off an A wave, B wave to the 618. Then we did a 1. We're looking for the 2 and then the 3. Okay, here is where I want you to be a little to concentrate in the zone. If it's a little too hard to see, it may be a little blurry, but this is the idea, right? The idea was that from the lows, we wanted to see that rally hold resistance, okay? A 3-wave pullback towards the 38.2 and the 50% retracement, which was the 432, 431 respectively in the SPY. Should those levels hold, then we wanted to see a 5-wave progression to hold resistance from this trend line. Okay, at that point, I wanted to take a short position here because it would have been a good level to take advantage of, right? Why do I say that? Because if price action continued on higher, then obviously we knew that this whole wave count was invalidated and the actual bottom was already in. But because of what happened today, right, our game plan changed. So let me review that with you. But before we do, okay, if you're new to the channel, please subscribe. Thank you for joining. Thank you for tuning in. Give me a thumbs up in this video, and yeah, hit that bell notification icon so you'll be notified when I upload the videos, because we do this every single day. Alternatively, if you enjoy the content and you like Elliott Wave, or you want to learn about Elliott Wave and how we navigate the markets, if you've been a viewer of the channel, you'll know that we are heavy on Elliott Wave theory. And yeah, a lot of our analysis has played out the way we've been interpreting it. So if you want to join Trending Waves, the Discord group, the link to the chat room is pinned down in the comments section. Okay, you have a free trial for a period of time. Come on in, sign up, and you have the option to cancel it right before the trial is over, and you're good to go. All right. Anyway, so taking you down to 1 hour, actually the 30-minute time frame, and let's review. Let's shut off our moving averages and let's take a look at price action here. So from September the 2nd, right, we went down in 1, up in 2, down in 3, up in 4, and down in 5. It was here on September the 9th that we sourced this trend line through September the 16th. It was also confirmed the 23rd, 24th, the 27th, held resistance at the 618, the wave B, and then we did 1, 2, 3, 4, and 5. Okay, now this is where I want to take a little bit of time to explain. Okay, so we wanted to see price action head on higher, okay, and then reject and then low. However, you can see here that we on the larger time frame, is very difficult to dissect a 5-wave progression. You can see that is 1, 2, and 3. So that'll be A, B, and then C. All right, there is no 5 waves here. So what we wanted to do on Monday, coming into today from Friday's review, was that we wanted to see those levels hold, right? Let me bring this back to you guys. We wanted to see the 50% and 38.2% retracement hold and then head on higher, because this would have been a good confirmation, a solid confirmation that the wave 2 was a little bit more clear, right? However, we are now labeling this as wave 2. Why is that, you may ask? We're labeling this as wave 2 because we broke the low. Okay, we broke Friday's low. So this morning we opened up and sold off aggressively. Okay, we then retraced A, B, and C. Now these two levels are the ones that I'm watching, and this is where we took the short trade, and we have a very tight stop in case we keep on hitting on higher. Excuse me. So the idea is here, guys, that if we retraced up in A, down in B, and up in C, 38.2 to the 23.6 should hold as resistance. Coming into tomorrow and Wednesday, we want to see this low break. Okay, as you can see here, we have a lot of wicks that are concerning to us, right? Because they are rejecting the 23.6 and the 38.2 fib retracements, and this retracement level comes from the high to the low, as I've been showing you guys in the past. Okay, so this presented a good level or a good entry opportunity to take advantage towards the downside. Now, our targets to the downside are going to be the 100% extension, which is extension of wave 1 versus wave 2. Comes in at 418.66. Obviously, that's the minimum the wave 3 should travel to. Okay, but it can always go towards the 1618, which comes down towards the 408.25. Now, if I take you up to the daily time frame, where is 408? All right, 408 falls down towards the 200 period day moving average, all right, or just below it. So what does that mean? That will mean that perhaps this is a correction already that is correcting this entire wave, this entire structure, right, from March the 23rd to the September 22nd of 2021. And why do I say that? Take a quick look at the chart. Okay, we only see here one big correction, and that's here from September the 2nd to September the 25th. This correction yield of approximately 10 to 11% to the downside. We go here to September 2nd high. We have only retraced 5.92%. All right. So what does that mean? That means that this retracement or this pullback has to be greater than this one in order to call this a change in trend, or a correction rather, of this entire structure. Okay, because that'll be up in 1, like we've been calling, down in 2. Well, I don't know if it's down here. I'm just saying down in 2, and then 3. Okay, but if we don't exceed this magnitude, then this is just a pullback, and we're still stuck within that higher degree wave structure, which I've been calling the primary degree 1. Okay, and we still have further upside to go. This was just a pullback, and we're about to resume the upside to the uptrend. So this 200-day period moving average is pretty important now. Okay, because if we go down to the 1-hour time frame and we turn on our labels, that is where our targets are. Okay, the 100% and the 1618. Okay, it's right below the 200-day period moving average. So it's pretty important for us to start noticing these things, because you guys may look that this is an all-out crash or the markets are tanking and whatnot, but it is healthy. We have to have these pullbacks. And if you miss the boat coming into today that we sold off and we didn't take this trade up here, it's okay, because you can just wait for this entire structure to unfold. All right, this whole thing to unfold, all right, of the wave 2, and just load up the boat somewhere around here to take advantage to the upside. Okay, to resume the trend. Okay, the possibilities are there still for the upside. You just gotta wait for it a little bit. You have to be patient. All right, so that's it for the SPY. Let's take a quick look at the Qs. The Qs, same deal. All right, down in A, up in B. This one goes down here. Sorry, let me quickly clean this. All right, there you go. So down in A, ABC 618 retracement level. Sorry, resistance trend line, and then we failed to break above this support and resistance line that originated here on July the 6th, resistance on July the 21st, support July the 27th, support August the 18th, and then now resistance, support here, and then resistance here. As you can see, clearly tell that we sold off. So the way we're looking at this, guys, is that this was down in 1, all right, down in 1, up in 2. We're in the makings of the wave 3, a brief pullback into the wave 4 to the 38.2 and the 23.6, and then the further decline to the wave 2, wave C or wave 2. All right, so I do anticipate further downside into this coming into this week. Unfortunately, October just started, but maybe the wave 2 gets completed within the first 2 weeks or the first week of October, maybe, and then that's when we start rallying. So a little bit more of patience, guys, and we'll get there. All right, so just to quickly recap, all right, I mentioned that this is important to note. All right, it's important to note these two corrections, okay, that should pair up at least. Okay, we have the 10% down here, that, or 10 11%, and we haven't exceeded that correction of the magnitude just yet. And if we are to do so, then we should be retesting the 200-day period moving average. All right, guys, so keep your eyes out open for that, and I hope this was clear. If you have any questions, comments, or concerns, let me know. Give me a comment down below. I'll be happy to answer your questions. Join Trending Waves. The link to the Discord group is pinned down below. Take care. See you tomorrow.